Let's head on over to that European market now and see how things are faring on that front. Of course, a little more impetus coming through from Donald Trump with regards to how he sees the status quo out between himself and China as well. Beijing perhaps not helping the cause as well this morning with a little bit of red, as you noted there, but there is a slight rally coming through on the European markets, particularly the DAX taking in some gains following yesterday's drop-off for most of the day. So a good market picture across the board. On the local front then, of course, a lot of earnings news has driven the market over the past few days, but certainly today will be impacted by just how things will fare between China and the United States and just how that relationship will fare. The industrials, well, we saw Tencent head a little bit higher a little earlier on in Hong Kong, so perhaps helping the industrials picture along that road. Over into the commodities and the resource shares, should I say. Overall, the resources are down, but the gold counters seem to be headed higher, with perhaps some safe haven trading still following through on that accord, while on the resource front themselves then, things have certainly moved in a different direction. The price of oil has also hovered in and around $60 a barrel, but now firmly above that mark, and that just comes as demand concerns certainly filter through into the market. The South African currency, well, it's headed for its worst month in at least a year, now sitting at 15 Rand 24 against that US dollar, so getting better today, having set at around 15 Rand and 35 cents earlier on today. Let's unpack this market picture now. We are joined right here in studio by Makwe Masilela, who's from Makwe Fund Managers. Makwe, thank you so much for that.
Pleasure.
That picture not necessarily the greatest, but we can say Donald Trump is the reason for all our woes sometimes.
Sure, and for quite some time now, you know, whatever he tweets over the weekend gets to have an impact. I mean, yesterday he said, listen, guys, I don't think I'm ready to have a trade settled with China for now. But at the same time, he came with some message contradicting the White House, saying, listen, I'm looking into cutting the payroll tax. Yeah. And that's the day after the White House said that that's not up for discussion. So those kind of mixed messages as well continues, unfortunately, to impact the markets.
What does that mean? If he cuts that payroll tax, and what does it actually mean for that economy? How does it help it? How does it help push that market forward?
It does. You know, remember, he started by cutting the corporate tax, and that was beneficial for companies. And just like back home here, if you cut our taxes, it means I'll have more money taken home. So then I'll be having extra money to spend on the economy. And we know everyone is looking to pay less taxes, so that gets to be beneficial for the economy. So that will be a very good move for the U.S. economy. And given that we've got the 2020 elections coming, definitely Donald has to make sure that he does everything that he can to make sure that he gets re-elected.
Yeah. Look, we know that Zimbabwe has sort of looked towards the same thing. The finance minister, Mtuli Ngube, is saying that he's quite a keen proponent of adding that sort of thing and cutting taxes somewhat and boosting income. We certainly hope that we get a similar message, perhaps on the local front. But here's something that has helped that, though. Inflation at 4%. That's a very good number. Surely they have no choice, surely, but to cut.
We hope so when they make that decision on the 19th of September, but chances are, given that their rent is very weak, and remember, South Africa, we're a net importer, so a weaker rent is obviously inflationary. And also, we don't know how this whole thing is going to pan out between US and China. So far, with all these mixed messages, it might continue to hamper the global economic growth. And I think those are the things that the Reserve Bank will definitely look at. But remember, the guys that are still left with 2 meetings to go, so maybe they might not cut now on the 19th of September, but probably they might give us an early Christmas gift by cutting then. But it's all going to depend on what's happening with the currency. But yes, that's a very good number, and far managed to beat the market expectations, because I think we're looking around 4.3 or so. 4% definitely is a number that's worth celebrating.
It's weird then when a number like 4% isn't enough to cut interest rates.
It's enough.
Is it because of future prospects of inflation, or is it because we're perhaps just not sure where our economy is going and we don't want to push inflation too much?
You know, because remember the whole thing, the guys, they're looking at inflation expectations for, which is supposed to be under 4.5%. But now, because of the weaker rand, then it tells you that the chances are that might be affected going forward. But if we see that it's firmly, you know, we have to maybe watch for a number that is coming the next 2 months as well. If it continues to be around those levels, then definitely one can say that they will cut. But for now, it's a question of a weaker rand might have a negative impact.
Okay, so let's say the rand dips below 14 Rand before the next meeting and perhaps hovers at around 13.85. This is just, you know, hypothetical. are we definitely then going to get
Hallelujah,
it? Okay,
because
so we're
by
praying
all
for a
means.
better rand right now.
By all means.
Okay, so we're certainly going to hope that the comments out of Jerome Powell as well on Friday give a hint as to where the United States is going, and that could then perhaps help shape our conversation a little bit more.
By all means, and it's not only him, you know, look what China have just done on Saturday, trying to lower borrowing costs. So it's very critical. So it's not only the US, European Central Bank as well. They said that watch out in the next meeting, we might come with stimulus that is going to beat expectation. So everyone around the world, they're making sure. But I think we have to be worried that why are they decreasing interest rates? It's because they're worried about the global economic growth.
So global recession definitely on the way, you think?
It's too early to call that because the difference is that
that's what they say the bond yields inverting means.
This time around is because we also have more money coming into the US because people feel the US is doing better than other countries, and they're buying those bonds because they see that as safe security. So the obvious happens, there's demand for bonds, then the prices will go down, then the prices will go up, then as a result the yield will go down. So we have to factor that as well. But if it has to happen, usually there's a lag of almost 20 to 22 months for it to happen.
Sure. So are you saying that something that has told us that we're going to be in a recession for the last 50-odd years may actually be wrong, and that it might not be a recession as yet?
Yes, because things have changed 50 years and compared to today. And the way people are buying, look what happened to Japan. Japan now, they're the largest owner of the treasuries when it comes to China. China started buying less. So I'm saying there are so many factors affecting the whole thing. When did you ever hear of Germany saying, I'm prepared to put stimulus? The guy's prepared to spend another 50 billion into his economy. We've got Brexit happening as well. There are just so many things around it. We've got Italy happening. There might be a vote of confidence that has to be debated today. So there are lots of factors that have to be considered.
Would you believe it if I told you then that you're in agreement with Donald Trump on that? On the fact that we're not headed to a global recession?
For now, I think so.
Okay, so let's talk about the overall market picture as well on the local front. The equities, we've seen a couple of earnings news come through. Are we perhaps worried? The JSE All Share sitting around 54,000 points odd. It may offer the best opportunity to buy in perhaps at these levels, but we're not sure if it's hit bottom yet.
By all means, you know, if you have to follow the textbook, they tell you that you buy the dips, then you sell it high. But so far it dips, then it gaps down, it doesn't even dip, so it gets even worse. Look what happened to major stocks, what happened to them. I think it's a question of one has to take a view that, are you happy to ride the whole thing and maybe take a long-term view? Because some other stocks, as much as they're down over 50% or so, they still offer good value. But unfortunately, if the economic environment doesn't improve, those shares won't do any better. Ride
the wave maybe is the call right now, is perhaps what we're saying. Certainly an interesting conversation there when one takes a look at how things are faring on that market picture. So that's Makwe Masilela there joining us from Makwe Fund Managers as we unpack that market picture. We continue